Hello and welcome to this special budget discussion. I am Neil Borate, Personal Finance Editor at Mint, and joining me today is CA Karan Batra, founder of Chartered Club. Karan, welcome.
Thank you.
So this budget is being billed as the common man's budget because of the big changes to tax slabs in the new regime, and the headline is that no tax up to 12 lakhs. But there are some catches, right? Do you want to explain the catches involved? So it's not to everyone, it's a rebate, it's not an exemption per se.
Right. So, yes, this is a budget for the masses, and the government is saying no tax up to 12 lakhs. But if you have income of more than 12 lakhs, then taxes get applicable from 4 lakh rupees onwards. So that is the catch. So if somebody is earning, say, 11 lakh rupees, no tax. Somebody is earning 13 lakh rupees, tax from 4 lakh rupees is applicable, which is surprising, but that is how it is. So they've given the slab rates that if somebody is earning from 4 lakhs till 8 lakhs, there is a 5% tax. That's 8 lakhs till 12 lakhs, that's a 10% tax. 12 lakhs till 16 lakhs, that's a 15%. 16 till 20, 20%. 20 to 24, 25%, which is a newly introduced slab rate. So last year there was nothing like this, which I believe is a good thing.
Okay.
And above 24 is 30%.
Yes.
So what happens is now these are small jumps. From 20 to 30 earlier it was a very big jump. So psychologically it has a good impact. So if somebody is earning, say, 12 lakh rupees, he is saving around 80,000 rupees as taxes. But somebody is earning 16 lakh rupees, he is only saving 50,000 rupees of taxes. But again, if somebody is earning 24 lakh rupees, he is saving 1.1 lakh rupees.
Right. So it's a uneven sort of thing. The other big catch is that it's only in the new regime. So the old regime has not been changed at all. And that makes the old regime much less attractive now.
It's like the old regime is being phased out. They officially cannot phase out due to certain reasons, but unofficially it's being phased out, that nobody will opt for it now.
Right. Now we got a bunch of questions on what happens if you have capital gains income, for example, because in the rebate which finance minister given, capital gains is excluded.
Yes. So they've said that the rebate that they're giving up to 12 lakh rupees, this is under section 87A, and they are not giving this rebate for capital gains. Last year there was some confusion, but this year they've given it very specifically that if you have capital gains, then you cannot claim this rebate. So what that effectively means is if somebody is earning, say, 10 lakh rupees from normal income, say salary income, and 2 lakh rupees from capital gains, then the normal income of 10 lakh rupees is tax exempt. But on the 2 lakh rupees of capital gains, they will have to pay the capital gains tax.
Sure. Of course, minus the deduction that is there for capital gains, which is 1.25 lakhs.
Depending on whether that's long term or short term.
Right. Another question that we got is, what if somebody is making business income of up to 12 lakh rupees? Will that get the rebate?
Yeah, that will also get the rebate.
So no issues with business income?
No issues.
Dividend income up to 12 lakh?
Yes, they'll also get the rebate.
Fantastic. And debt funds are now taxed at slab rate. So will that also get the benefit of the rebate up to 12 lakhs?
That is something that needs to be figured out, but my gut feel is that they will not be able to get that if that is being classified under capital gains, because anything under capital gains is
will not get the benefit.
Yes, but the smart planning that can happen is that rather than investing in debt funds or liquid funds, which are again interest bearing, if somebody is investing in an FD or RBI bonds, which is it is clear that it is interest income taxable as other sources, at those places we can claim the tax exemption. So some planning here and there can happen.
So an FD of up to 12 lakhs will get the benefit of the tax rebate?
Yes, FD
interest of up to 12 lakhs. Okay. Now apart from the slab rates, there have been a bunch of other provisions in the budget. So let's start with TDS. A lot of the TDS slabs have been changed. The most notable one is the senior citizen one, which is that if they get up to 1 lakh of interest from FD, then they don't have to face TDS deduction. Earlier it was 50,000. Anything else that springs to your mind when it comes to TDS?
So this is basically a consequential amendment. So if the tax rate is getting reduced, we have to make consequential amendments in the TDS as well. So one you mentioned is the slab rate has been increased. For non-senior citizens, it has been increased from 40,000 to 50,000. Apart from that, on professional fees, it has been increased from 30,000 to 50,000. So these are some of the amendments which have been made. Another amendment is on the rent. So TDS on rent earlier was 2.4 lakh rupees per annum. Now it is applicable above 50,000 per month. It is not 6 lakhs per annum, it is 50,000 per month. So now we have to read it per month onwards. And this is TDS. That does not mean that this income is tax free. Tax would still be levied. It's just that the person who's paying you the money is not deducting tax.
Yes. So this actually refers to this point here on landlords, that if you're a landlord but you're getting rent from a non-individual tenant, let's say a company is your tenant, then earlier they would have deducted TDS if they were paying more than 2.4 lakhs per annum in rent. Now if they are paying more than 50,000 rupees per month, then they have to deduct TDS. So in a way it kind of comes to 6 lakhs, but I get the wording of it. We should go by the monthly rent, not the annual one. The other one is about TCS. So TCS on liberalized remittance scheme LRS, that limit has gone up from 7 lakhs to 10 lakhs. And for education purposes, if you've taken a loan from a bank or a specified institution, then there is no TCS anymore. So that's a pretty major provision, right?
That is right, but more can be done about it, right? So, I mean, why a 20% tax? Why not a 5%? Why not a 10%? So, there is no capital account convertibility. Or are you saying that people should not spend abroad? So, we believe if the point is to track the expenditure, that can happen at a 10% tax rate as well. 20% is like draconian.
Right. So 7 to 10 is good, but that 20% itself can change. Above 10 lakhs can come lower. Okay. The next is NPS. So NPS Vatsalya has been given the benefit of section 80 CCD 1B, which is 50,000 rupees benefit, which is there for regular NPS, and Vatsalya applies to children. So if you open an NPS account for your child, then that's under Vatsalya. I think this is the only provision that's been given for the new old regime, right?
Yes, correct. This is the only one, but a good one, a welcome one.
Then in case of self-occupied property, there is a waiver of reasoning that you had to give earlier if you had two of them. So could you explain that a bit more?
So earlier what used to happen was we were able to get this deduction only if I was residing in a separate city because of my employment or due to some reason. Now there is no questions asked, there is no reasoning which I have to give. Wherever I am, whatever I am doing, I am eligible to claim 0% tax on two self-occupied properties, which was earlier not the case.
Right. And just to explain this a bit more, so this is the tax on notional rent, right?
Yes.
That even if you're not renting out your flat, still the government assumes that you're letting out your flat, and then it charges tax on notional rent. So earlier they had allowed up to 2 houses where they were not deducting tax on notional rent. So that remains the same, but the benefit is you don't have to give a reason why you have 2 houses that you're not letting out effectively. So chalo real estate ke liye acha hai.
Very good.
Updated return.
So now there is a amendment. Earlier we could file an updated return up to 2 years. Now they have extended it up to 4 years. But frankly speaking, when you are filing an updated return, we can only file it if our tax liability is increasing, not when our tax liability is decreasing.
Right.
So I can file an updated return up to 1 year if my tax liability is increasing up to 25%, 2 years up to 50%, 3 years 60%, and then 70%. So if my tax liability is increasing, I am paying more to the government is welcoming with the open arms. But if I am not paying more, then it is not allowed.
Interesting.
So it's a one-way street.
It's a one-way street. But the benefit of this is that if you have inadvertently missed out some income, then you are removing yourself from the risk of a scrutiny, of penalty, of prosecution, because you are voluntarily coming forward and saying that.
Practically what is happening is now the government is sending a lot of messages that we think that this deserves again review or something, and people are going ahead reviewing and paying more taxes. Government is just giving a caution. Government is not saying I have finalized it, just a caution. On the basis of that caution, some people are coming forward and paying more taxes.
In fact, recently a lot of people got SMSs for political donations, so-called political donations. And you know,
if I am giving you a caution and you go ahead and take a step on that, that basically means that there was something wrong there. Else you would have never taken a step.
Correct.
So the government is right in sending the messages.
Correct. And finally we come to ULIPs or unit linked insurance policy. So what is the change there?
So ULIPs where the premium paid is less than 2.5 lakhs per annum, it is not a capital asset. That means where on the maturity of these, it is no, I would not be paying any tax. But if I am paying more than 2.5 lakhs per annum, then it is a capital asset. So say for example, I am paying 3 lakhs. And after 10 years, I redeem this and I am getting some gains. Now, where do I pay the tax on these gains? Do I pay this as capital gains or other sources or what? Now, the government has clarified that this would be classified as capital gains and taxable as equity mutual funds. So, the capital gain tax rates will apply, 12.5%.
Right. So, just to rewind a bit, earlier the maturity value of ULIPs was tax exempt under section 1010D. Then the government brought in an amendment saying that if it's less than 2.5 lakhs, the premium that you're paying every year, only then you are exempt. नहीं तो tax भरना पड़ेगा. But they did not say that how much tax. I mean, it was a bit ambiguous that is it capital gains or is it other income. And that ambiguity is now gone. Now it's clear that if it's more than 2.5 lakhs and you have a maturity value, it is taxable, but it is taxable as capital gains, which is 12.5%, which is beneficial for the end taxpayer.
Right. Plus now the government is introducing the new tax bill, which would be presented very soon.
Yes.
They are talking about ease of doing business and simplification, but let's see.
Yes, looking forward to that. We'll soon have you back for that. But Karan, thank you so much.
Thank you, my pleasure.
Great having you.
Thank you so much. Thank you.